finding reliable income in this market, well, it can feel like looking for a needle in a haystack sometimes.
Yeah, definitely. Lots of volatility out there.
So today we're diving into BXSL. That's Blackstone Secured Lending Fund. And the big question we're tackling is that juicy 9.7% dividend yield. Is it a smart buy or maybe some kind of trap? Our job here is to unpack the analysis we've got, break down what makes BXSL tick, and really help you figure out what it could mean for you.
Let's get into it.
Okay, so first off, what is BXSL? Fundamentally, it's a business development company, a BDC. You'll see it traded on the NYSE.
Right, and they focus on lending, specifically to U.S. middle market companies.
And the key thing about BDCs, different from regular companies, is they have to pay out most of their income as dividends. That's why you see these big yields.
Exactly.
Right now, BXSL is trading around, what, $31.50, which gets us to that headline 9.7% yield.
Yeah, and looking at the numbers behind that, the market cap is solid, around $7.2 billion. Revenue over the last 12 months, about $1.38 billion. And net income is roughly $660 million. So that gives you a net profit margin near 48%, which is pretty impressive.
That is quite high.
But here's what really stands out for me, quality-wise. The non-accrual loans, basically, loans not getting paid back on time, are just 0.3%. Tiny.
Wow, 0.3%. That's incredibly low.
It really is. It tells you the income stream supporting that dividend isn't just high, it's, high quality. Less risk baked in there than the yield alone might suggest.
That makes sense.
Yeah.
So speaking of the dividend, it's paid quarterly, 0.769 cents. How safe does that payout look? That's crucial for income folks.
Well, it is covered by the income they're generating. The payout ratio is up there around 97%.
Quite high.
It is high, yeah. But having Blackstone managing the fund provides a lot of confidence. People tend to trust that they know what they're doing and can maintain that payout. It suggests, internal confidence too.
Yeah, so strong quality, covered dividend with strong backing. Now, let's pivot a bit. Every investment has risks. Where's the potential trap element here?
Right, the flip side. You got to look at the debt. BXSL carries about $7.4 billion in debt. Now, that's about 1.2 times its equity.
How does that stack up? Is 1.2x high?
It's manageable for this kind of structure, but it's definitely something you need to watch. And the big external threats, interest rates changing, and just the general risk of a recession hitting the economy, those could impact their borrowers.
Sure, that makes sense for any lender.
Absolutely. But countering that somewhat, they have $14 billion in assets, and that loan book has proven pretty stable, so there's resilience built in too.
Okay, so weighing the pros and cons, what's the verdict from our source material? Should you buy this?
The analysis basically says yes. If you're primarily looking for income, you like the quality associated with Blackstone, and that low default rate is attractive.
Right.
But it leans towards no if you're gunning for massive capital appreciation, or if you just have a low tolerance for companies carrying significant debt.
So kind of depends on your priorities.
Exactly. The overall takeaway was, it's a solid BUY at current levels for long-term passive income.
Got it. Now let's shift to the technicals. What are the charts telling us about the price action?
Okay, so looking at the longer-term picture, like the monthly chart, we see this pattern called an ascending broadening wedge, forming since mid-2022.
Which means?
It generally indicates upward momentum, so bullish, but also that the price swings are getting wider. Increased volatility, basically. Then zooming into the weekly chart, there's a really important area between roughly $25.50 and $28.50. This has acted as strong support, a demand zone where buyers have consistently stepped in.
So a floor, potentially.
Kinda, yeah. Now, the current price, around $31.50, is actually bumping up just below what looks like a supply zone resistance between $32.50 and $33.70. That's where sellers might appear.
No, maybe a ceiling overhead.
Could be in the short term. The daily chart shows it moving up within a channel towards that supply zone. So the expectation is it might test that $32.50, $33.70 area.
And then what?
Then potentially a pullback. Maybe back towards the $28 to $30 demand area we talked about. The crucial part is if it holds that support zone on a pullback.
What happens if it does hold?
If it holds, the technical suggests the next bullish move could be quite strong, potentially pushing back towards the previous all-time high around $38.50. And interestingly, there was a weekly candle back in April 2025 with super high volume. That often signals strong buying interest.
Okay, so that gives investors a couple of ways to think about it, strategy-wise.
Right.
For shorter-term traders, maybe watch for that test of the supply zone. If it stalls there, perhaps a sell trade targeting that pullback to the demand zone. But for longer-term income investors, it sounds like the strategy might be watching for dips into that $28, $30 demand zone as potential entry points to ride the trend, aiming for that $38, $30 plus level eventually while collecting the dividend.
That sums it up nicely. Two different approaches based on the technical picture.
All right, so to wrap up, BXSL presents this interesting mix. You've got the high yield, that impressive credit quality, and the Blackstone name.
Yeah.
But you also have to keep an eye on the debt and how it might react to bigger economic shifts, like interest rates. Hopefully this deep dive gives you a much clearer picture.
And maybe the final thought for you listening is this. How do you weigh that attractive dividend and solid loan book against things like potential interest rate moves or your own long-term plans? What does digging into the details like this teach you about making smarter choices when the market feels uncertain?